Hey traders, welcome back to my channel. This is Wellness Mateer, and I'll be your coach, mentor, friend, confidant. I'll be teaching you today exactly how to actually mark up your charts. Basically, before I dive into the content, of course, I want to invite you to become a channel member, subscriber. Hit the subscribe button and the bell button. That way you get notifications of future videos when I do them. But welcome to my Forex Bootcamp training. I do this once a week and I post it on my channel. So hopefully you guys get some exciting information, some great content, some strategies, pointers, ideas, and how to mark up your charts and how to profit from the market going forward. Of course, there's never any guarantee that you'll ever make money when trading, but at the same time, you won't know until you try. So that's a disclaimer that I gotta put out there. So please don't invest or trade with money that you need to live off of. You're gonna need that money, right? But anyway, you definitely want to create a demo account and do some paper trading before you actually become a live trader, right? Before you open up a live account. The reason why I suggest that you open up a demo account is because the demo account allows you to make mistakes and you losing or making fake money. So the key in transitioning yourself from a demo account to a live account, just like a transition of a caterpillar into a butterfly, you have to go through that incubation stage, right? You have to practice until you're consistent. And when you're consistently making profits in the market, that's when you go live. But that journey to consistency takes time. It may take a couple of months, may take a year, may take a few years. But in your journey of becoming a successful trader, you want to make sure you take copious notes, you practice often, review your notes, and try them not to make the same mistake twice. That's why I've created this channel, is to help, upcoming traders who you're intermediate become advanced, because trading is a skill. Once you learn the skill and perfect the skill and you write it down on a trading plan and you execute your trading plan, great things can happen for you and for your loved ones. Okay, so whatever your goals are, whatever your dreams are, the money can be extracted from analyzing the charts, placing A+ setup trades, exiting, and never being greedy. Exit by placing, your parameters, your take profits, your stop losses, your break evens. You got to put all that inside of your order. Okay, so once your order is placed, you set it and forget it, so to speak. Meaning you don't micromanage the order. You just go ahead and place it and walk away from the charts, walk away from the order, and make sure that you manage it over time. You might want to move your stop loss to break even. You might want to move your stop loss where you actually made 50% of the trade, and so on and so forth. But so let's jump into the information that I wanted to share. So what you're looking at in front of you right here is a markup that I did on Bitcoin yesterday. And in this markup, I was able to extract a commission out of the market, a profit, if you will. So I'm going to go ahead and share with you exactly how I was able to approach this and do my technical analysis. Technical analysis is just pretty much setting up your charts to go off technicals and price charts and things of that nature. So let me dive into that information. First, I want to share with you this. My journals are up and out on Amazon. So if you guys want a notebook, something that you could, put your notes in, you can go ahead and go to Amazon and type in my name, Wellness Mateer. And once you type in my name in the search window on top here, you'll come across all of this information here, which is notebooks that I've created to help those become, better traders and things of that nature. I just got this one delivered to me. So if you want to support the channel and you need a notebook because usually when you have a notebook that specifically has a title of what you're trying to learn, it'll keep you on track. So there's some Forex notebooks. There's some other notebooks on here as well. So if you guys ever wanted to get a notebook and you want to support me in this channel, go ahead and go to this Amazon and order yourself a notebook. You might want to get more than one meaning if you get two, one used as a notes when you're learning how to trade, another notebook for journaling where you are actually recording your emotions and writing down how you felt about certain trades and so on and so forth. So I'm sponsoring myself. This video is being sponsored by my creation of my notebooks that I created, and basically it's a line notebook. It's blank, and you just go ahead and put your notes in when you're actually watching my videos. All right, so back to the charts. So basically, let me share with you what I've done. Okay, so I went ahead and reset my account, okay, to $100,000. So the reset is basically $100,000 on the 27th of March, okay, and since I've gotten a little bit better in trading, I wanted to see how I can, how high can I grow this account. So basically my first trade was a loss, and that's okay. It's going to be losses. That's one thing you truly have to understand about trading. Losses will come. Whether it's the first trade, second trade, third trade, you'll experience losses. Okay, but when you experience a loss, you take a step back, you reevaluate, and then you execute another trade. And as you can see, my second trade was a profit of $496.35. Then in the third trade, I lost $118. But then on the 4th, the 5th, the 6th, okay, I was marking up my charts, I was analyzing the Bitcoin, and I started making some profits here. $2,794.61. And they all timestamp, so you could, stop the video if you want to review the timestamp. And so it became a little bit more profitable going forward. And then there's 3 losses in a row, and then another profit. And then I woke up this morning to a $9,901 profit, which is not too shabby, which grew my account to $112,869.91. Now remember, this is all paper money. See, paper trading, fake account, fake numbers. And what you're doing with this account, what I'm doing with this account, what you'll be doing with your demo account is you're practicing. You're executing your trades. You're taking notes. You're rewatching my videos to see what pointers you can get out of it. You're writing down your notes. You're going over your notes, and you're executing your notes. Okay, so I'm sitting at $112,869.91. So over time, as I become a lot more consistent, and I've been pretty consistent. As you can see, these consecutive wins, it's not too shabby, but again, losses will happen. The funny thing about trading is you have to try not to get emotional. Okay, demo account, you have no skin in the game, right? Whatever happens, happens. But treat it like a real account, and then keep the emotions out of your trading. Meaning, don't get upset. Don't get over exuberated or happy when you win a trade. Be natural, cool, and collective, because as a professional, you're going to want to have that mindset that no matter what happens when you place a trade, you place your trade based on your trading plan. You base your trade on the execution of what you wrote down in your trading plan, and you only enter the trade based on certain setups that you've written on your trading plan. What if this happens, and this happens, I'll enter the trade. So let's go ahead and go over the chart again now. So let's mark up the chart. I'm going to show you how I was able to make that $9,000. And basically, That was a trade that was basically a 1 to 3 trade, where I entered over here where this line is. I entered on this line and I was able to capitalize on all this, okay, when I woke up. So yeah, I was up, let's say I entered it around 6:30 in the morning, and then when I woke up about 11ish, okay, I was able to close the trade out for $9,901. Now imagine that, if you will, okay, that you got to a point in life where you never gave up, you reviewed your notes, you try not to make the same mistakes, right? And you wake up to a $9,000 profit. What would you do with the money? That's why I trade for the opportunity that this could literally change my zip code. This can literally set me free financially. That this could literally pay all my bills, allow me to live a lifestyle that I've always wanted to live. That's why I got involved. Why are you getting involved? Write that down in your notebook. What's your why? Because your why's got to be so big that it makes you cry. All right, so let me erase everything and show you exactly what I did to understand what's going on in the market. So I'm going to delete everything. Okay, so grab your notebook. Hopefully you get one of my notebooks that I just promoted to you. But grab your notebook and get your pen. Go ahead and get yourself something cool to drink, or hot coffee or tea, and let's dive into the content. All right, so start with the monthly, and I want to see what the overall look of the market, right? The overall look of Bitcoin, BTC, USD. All right, I want to know if it's an uptrend. I want to know if it's a downtrend. So looking at the chart, okay, I notice that there's some trends here. At one point, Bitcoin was in an uptrend, right? So if we take our trend line and we mark this up from the bottom to the top, you'll notice that this was an uptrend. Okay, this was an uptrend. All right, and this is the high of the market. So we put the trend line and we also put the highs. So this is where the market was. At one point, the market was at these highs, at the very top of that wick. Okay, and then the trend line is pretty much hitting 1, 2, 3, a couple of wicks. You want to make sure it hits at least 2 or 3 wicks, and you pull it all the way up. So all this over here was considered an uptrend. Okay, so you do this here. Let me get this tool. You start from the bottom, you go up. Whenever you see a pullback or a black candle, you pull it back, and you pull it up, and you pull it back, and you pull it up. As you can see, the market's making higher highs, higher lows. So higher high, higher lows. And then it pulled all the way back down here, cross your trend line, okay, which now is causing it to have a break in structure, right? So a break in structure is when the actual market goes in the opposite direction. So you had an upward structure, and then it came down and broke the trend line. Now you have a downward trend right here. All right, so structure was broken. Okay, so we'll pay close attention to that. Then we're going to go down to the lower time frames to see if the market's going to continue to trend lower like this, or will it reverse and continue and go up, right? Because we need to see if there's going to be any market structure shift on the lower time frames. Okay, so how do you know if it's a market structure shift? Basically, again, it crossed this trend line, okay, and then you could also put a line underneath the last down candle, okay, which also is another confluence that'll remind you that if the market goes below the last, down candle or black candle, bearish candle, that also will tell you that the market structure has shifted lower. Okay, so that's also a key level. You can also put it there as a key level. Okay, and now you want to go down to the lower time frames. So now that we're in the monthly, we want to take an overall look of the market. We see the last candle on here. Okay, class, what's the name of this candle? If you don't know the name of the candle, I encourage you to go to my channel and listen to the Candlestick Bible book being read to you. Okay, but if you've been following me and you're a subscriber to the channel, you already know that this candle is a gravestone candle. Okay, meaning a long wick on the top, okay, a small wick on the bottom, and a little line going sideways. All right, so basically it's a candle where the market was very undecisive and it doesn't know whether it should go continue its journey lower or continue its journey higher. But usually with a gravestone candle, the market tends to trend lower. Okay, so let's take a look to see if that is real. All right, so now we're going to go down to the weekly time frame, but keep in mind that everything here has got to stay on the chart. So if we go on the weekly time frame, we're going to drop down to the weekly time frame. We're going to take a closer look, okay, because it takes 4 candles. All right, 4 candles to make a month, right? 4 weekly candles to make a month. So the past 1, 2, 3, 4 candles, as you can see, right, they didn't move. It's pretty much stayed in a zone, right? So you could put a box around that zone. So let's box it up and say this is why 1, 2, 3, 4. This is why the market, right? This is why that last candle on the monthly was a gravestone. It was undecisive. It didn't decide whether it wants to go up. It didn't decide whether it wants to go down. It stayed right in a zone. We call it's in consolidation. All right. So when you see that, you want to mark it up as well. So let me mark that up and say, okay, the market is in a consolidation zone. Okay. Now, that's the weekly, okay? And 1, 2, 3, 4 candles. Now we're going to drop down to, well, let's take an overview look. All right, again, the market was in an uptrend. All right, then it came down and broke your trend line. Okay, and it also is lower. You can adjust this red line down to the last black candle on the left here. Okay, and now you'll notice that there's also black candles up here, right? So at one point the market was up, it got exhausted, and the sellers, black candles are sellers, started pushing the market down. White candles are bullish candles, meaning they are buyers. People are buying the market. Black candles are bearish candles, which mean people are selling the market. And yes, you can make money when the market goes up, and you can make money when the market goes down. That's why I love Forex. Okay, you're not just buying a stock and hoping that it will go up over time. You can actually trade the market and make money both sides of the market when it's actively trading. Okay, so I notice here that I can also put another black line underneath this candle over here. Okay, because the market during its journey going back down, it broke this area. for a market structure shift, which is bullish black candle right there. I don't know if you guys can see that. Let me make it bigger. Okay. Because for the market to continue to go higher, it would have to bounce off this line, right? Which it did in the past, right? It bounced off the line and bounced off the line and made higher highs. But at this particular point, when the market went below this candle and also below this candle, it broke the line, right? It broke the line, pulled back and touched the line, and continue its journey going lower, right? So now we're bearish. This is a bearish market right here. All this is here is a bearish market. All right. So you would ask yourself, okay, should I be looking to place a sell order? Well, we don't know that yet. We don't know that yet because we do have to go down to the lower time frames. Okay. Now the higher time frame is usually where you actually want to, focus on, because in that focus, it'll, keep it in your mind that in the higher time frame, you want to go with the flow of the market, right? If it's flowing downward, you want to try to look for sell opportunities. If it's flowing upward, you want to look for buying opportunities. Okay. So we're in a box here. We created a box with 4 candles because it's in consolidation, right? 1, 2, 3, 4 candles, right? But now we want to go down to, and it's going sideways. As you can see, this whole area right here is going sideways. Very indecisive. Okay. But it didn't fall below the last candle to continue its journey. So we could put support down here. All right. That's what we call support. And I'll make it a black line for you guys. So we'll make it support. Okay. Resistance is on top. So you got support, which is a floor. Resistance is on the top. So your resistance line could be up here on this red line. And we'll make that black as well. And we thicken it out here so that we can remember. Okay, so resistance, support. Okay. And we're going to go down now to the daily candle. Okay, and you'll notice as you go down to lower time frames, everything starts to look a lot clearer. When I said it was going sideways, going right in consolidation, that's exactly what it's doing. Okay. But look, there's some opportunities here to place a trade, because even though it's going sideways, right, in consolidation, is not breaking the support line per se. I mean, you can stretch out your support line because this area down here is the lowest point in your support line. You switch, extend it to the lowest point, and now that becomes your support line. Okay. But there's some patterns happening here which would allow you to, capture some pips. We call them pips, on an upward, tick, even though the market's very indecisive and it is technically in a down trend. Okay, so you'll be looking for sells if you want to take advantage of the trend going lower, but there's some opportunities to get into the trade for like a nice little pullback as well. So all right, so in the daily, even though we boxed it up, we want to make sure get the high and the low of the box, because this is what we're in. We're in this box right here. Okay. Now in the daily, what I normally do is take the last candle, okay, the most previous candle in the daily, okay, and I box that candle up, because this candle will give me my directional bias, okay, of which way the market's going to go. Okay, I got the overall bias by starting with the monthly, going down to the weekly, Now I'm in a daily. Okay. Because in the daily, I want to know if the candle, when I go down to the lower time frames, I want to know what's going on, within the previous day candle to make a determination whether I want to get in on today's candle. Okay. So I box it up and I put a couple of key lines on that, and I'll go ahead and mark it up for you guys so you guys could follow in my footsteps. So I take the top of the candle, I mark that up, I change the color, and I make it thick. Okay, so a thick orange line. Okay, so you go to the left panel, you go ahead and grab this tool called the horizontal ray. You make it your favorite. That's how you make it a favorite, and it creates its own little panel up here. So you grab that tool and you mark out the top and the bottom. Okay, and then you put a line in the middle. Okay. Like that. All right. Now we're going to drop down to the 1 hour time frame now to get a closer look at what happened previously in this particular candle, which is a black candle, bearish candle, and it's actually, pulling lower, right? So let's drop down to the 1 hour. Okay, so in the 1 hour, we see the market pulling back towards the middle line, and that is considered a pullback, right? Because the trend after the market broke our trend line, over here, everything below this trend line, we look for sells. Everything below the trend line, we look for sells. Okay, if the market trades above the trend line, we look for buys. Okay, but I was able to capitalize on my trade that I just showed you based on the pullbacks, because as you zoom in, you'll notice that the market was making higher highs, but yet pulling back, right? And there's a pattern. Once you understand the pattern, you could place a trade based on a pattern. I'm going to show you what that pattern looks like. Okay. So for example, if we were to take our path, right, our path line, we notice on the left side over here that the market was trending lower. Okay. Then it pulled up, pulled down, pulled up, pulled down, pull up, pull down. Each time it's trending lower, right? But at this particular point, the market pulled up and broke this high, right? Broke this high, right? And once the market breaks that particular high, that was considered a market structure shift. Okay, so let's mark that out. Because the market was trending lower, it couldn't break the support line, right? Then it pulled up, broke this level here. That would be considered a market structure shift. Okay, because if the market wanted to go lower, it wouldn't have broke any levels on the left side. It would pretty much go up to this line, right? And then continue its journey going lower, like that, right? Continue its journey going lower, but it didn't do that, right? Instead, it broke over here. Okay. It broke over here. And I'll get another line to show you what I mean. This whole area right here, the top of this area broke that area there. Okay, so whenever it does that, it's considered a market structure shift. Okay, even though it's retracing, but it's still considered a market structure shift, because when this happened, it's gonna pull back like it did right here. Make that my favorite, so I can find it on the panel. It pulled back all the way down, didn't make a lower low. It found itself, and I'll open it up to show you like where the fair value gap is down here or the order block, but it went down here and decided to go higher than this level here, right here. Then it pulled back, then it decided to go higher than this, higher here. So we have ourselves a nice, little trend going up, right? Then it pulled all the way back here, and look what it did. It broke this structure, but be careful, the market likes to fake people out, and then it continue its journey to go back up like this. Okay, and that's how I was able to capitalize on the trend going up. Okay, because I noticed there was a shift in the market right there, and I was able to capitalize on a couple of bullish trades. Okay, but the last low is over here, right? That would be considered the last low, and look what it did. Now it's pulling below that last low, which means now the market want to continue its journey going lower. Hopefully that makes sense. Okay, because the market couldn't make any more higher highs, it decided to pull back, right, make lower lows, and then now it went ahead and broke this lowest low on the left here. So yeah, now we're going to take a closer look at placing sell orders to capitalize on the market going down. Okay, now if you guys got questions about what I just did, you can comment them in the comment area. And if you want to do a one-on-one, so I can show it to you, on a one-on-one sit down, we can do that as well. Just reach out to me. But now that we're on the hourly time frame, we want to look at placing sell orders, because a lot of great things are happening here. So let me go ahead and zoom in. Okay, take all this stuff out. On this area here, let's zoom in. Okay. All right, now I just showed you a market structure shift, right? And the market started to trend lower. And then, market structure shift and the market started trending higher. But the same can be true when looking at the daily range as well. So we marked out the daily candle. Remember the high and the low, right? The same can be true. So the market, as you can see, and this is where I pretty much place my trade over here. The market, as you can see, couldn't make any lower lows here, right? But what do you see right here with this candle? If we stretch it to the left, what do you see? We see the market, excuse me, with this candle went higher than the left side, causing it to have a market structure shift right there, right? Because like I said, if it was going to continue to go lower, it wouldn't have broke this area. Okay, so the last white candle on the left, whenever you see a bullish momentum candle breaking any candles on the left, that would be considered a market structure shift. Okay, so over here, as you can see, even the market's going up here, right? But yet pulling back, right? It's pulling back with these black candles. So there's got to be another market structure shift for it to continue its journey going lower. Okay, your overall bias may be, okay, placing a sell trade, but you got to pay attention to yesterday's candle, which is what I marked up. Okay, because you want to see if there's an opportunity with the past day or even today, whether there's an opportunity to place a trade. Because everything I just showed you previously was historical data that happened in the past. So now we're going to current present time based on yesterday's candle. Okay, so what would cause this to continue to go lower, okay, would be another market structure shift. So the lowest low would be right here. The lowest low would be right there. If the market was across this line, that would be a market structure shift. Because right now we're in a little pullback, a bullish pullback. Okay. But if the candle pulls all the way back down to this last candle on the left, that'd be considered a market structure shift. Okay. And that's when you would place or consider placing sell order trades, because remember, this line was our support line, right? Again, if the candles break the support line, goes back and touches support line, it becomes resistance, and then you're looking at sell trades. But right now it hasn't done that yet. Okay, so we're pretty much trying to monitor to see what it's going to do. Is it, going to continue going higher? Okay, and let me explain the lines that I put here. The high, which is over here, this is the high of the market for yesterday. This is the low of the market for yesterday. Okay, let me erase this. This is the middle of the market. Okay, so typically when you mark up your daily candle, the rule is not to trade in the middle. Okay, the rule is when it's on the bottom, your aim should be looking for buy orders to head towards the top. Okay, so that would be your aim. That once it's on the bottom here, get a trend line. Once it's on the bottom, you want to look at placing buy trades, bullish trades when it's on the bottom. If it's on the top, you're looking for sell trades like this. Okay, so if you were, in the market over here, looking at the market over here, and it's at the top, you'd be looking at placing sell trades to go to the bottom. Now that the market's at the bottom, right here, you're looking for buy trades to go higher towards the top. Okay, but it's in the middle. So when it's in the middle, you really don't want to do anything. You want to make sure that it either crosses the middle or comes back and retrace back to the bottom where the trend line is, bounces off the trend line and goes higher. Okay, you could look at it that way. Okay, but another reason why I put this, I marked up the daily candle, it's for this particular reason. That if the market, if you watched my last video, you'll notice that if the market goes below this orange line, okay, you want to consider getting in the market for a sell. If it goes above this orange line, which is a high of the market for the day, yesterday's high, you're looking at continuation to the higher side, looking to place trades, bullish trades going up. Okay, but right now we're in the middle. Okay, and what we want to do is monitor what's going on, but we notice it's a market structure shift here, right? Now, within this candle, where we're in the hourly time zone area, within that area, we want to mark out our fair value gaps, which is 3 candles that are, wicks are not touching, with the middle candle in the middle separating the first and the third candle. So we see this candle here has a wick, this black candle has a wick, but we see this bullish momentum candle in the middle breaking the two up, because as other candles, you'll notice that the wicks are touching each other, but when there's a gap, there's unfulfilled orders, because there's a lot of buying during this candle, and the market forgot that it has to come back and fill these orders that were left behind. So when you see that, you got to mark that up and place that as a gap, a fair value gap. We call it FVG, fair value gap. Okay, so, and then we try to find another fair value gap on the bottom here to see if there's any other fair value gaps. Nope, see, all the wicks are pretty much touching each other, so there's no other gaps in this particular area except for right here. Okay, I almost missed it. I'm going to color coordinate these. All right, here's another gap right here between this wicks and this wick. That's another gap, and we mark that as a fair value gap. So we mark out fair value gaps because the market has to come back, pull back, and fill those gaps in order to continue its journey going higher. If at one point the market breaks below these gaps, okay, then it wants to continue its journey going lower. If it starts breaking these lows, and you can mark out the lows, okay, there's a low here, and we'll make it red. There's a low there. There's a low here. So a low is pretty much everything underneath the black candle. Okay. There's a low here. So if the market breaks any one of these lows, then that would be considered a market structure shift. Okay. And then want to continue its journey going lower. Okay. But if the market pulls back and fills a market fair value gap, it may bounce off the fair value gap, and I'm going to show you what I mean. We're right here. The market may come back, fill the gap, and continue its journey going higher. The market may pull all the way back, go to this fair value gap, and continue its journey going higher. Okay, and you want to pay attention to a couple of key candles that need to form in order to place a trade going higher, bullish, going up. Okay, and those candles, you can learn about those candles inside the candlestick Bible book, but you'll be looking for a bullish engulfing candle that, if it comes off the fair value gap with a bullish engulfing candle, then you'll be looking at placing a trade going higher. Okay, so those are your so you plot out your strategy, right? That's how you plot out your strategy. That's how you plot out traps. That's how you get your A1 setups. That if you can anticipate these things to happen, the probability is in your favor, right? But there's no guarantee. There's no guarantee. I mean, we can mark up the charts and say, okay, hopefully it gets to this point, it goes higher. But we don't know if it's going to do that. We don't know the future. So, but we can only plot out what we think we know and execute a trade. That's why you always place a stop loss below your trade in case it goes against you. Okay. So as you can see, it's pulling back, right, towards the fair value gap. So we're going to go down to the lower time frames. Let's say the 15-minute to take a closer look to see what's going on here. Because whatever's happening on the 1 hour, and you could split screen it too. This is the 1 hour. You can split screen. If you got the paid version, you can split screen and put two, panels next to each other, charts next to each other, and we'll make this the hourly chart. Make this the hourly chart. You can see the pullback right there. Okay, and we'll monitor that on the right panel, on the right chart. And as you can see right underneath there is a gap. This is your gap right here. The huge middle part is your gap, and it is filling it, right? It's inside the gap right there on the hourly, right? Okay. For some reason, oh, sorry. This is gold. I just caught myself. Hold on. I need to put Bitcoin. Here we go. All right. Because I thought that fair value gap looked kind of odd. It didn't look like this one on the left. So this is where your fair value gap is. Right here. Same as the left panel. So we're going to monitor that like this. And we're going to drop over here on the 15-minute. As you can see, it's getting closer to the fair value gap that we marked up on the right panel. And look at that, it broke that line, right? It broke that line, so we're going to pay close attention to it. Is that a market structure shift? Okay, we'll pay close attention to it. Or is it just a pullback? Okay, or is it going to bounce off the fair value gaps and go higher? We don't know yet. Only time will tell. Okay, let's go down to the 5-minute on, not this one. We're going to keep this on an hour. This one, we're going to make it 5-minute. Because you want to execute your trades on the 5-minute time frame or the 1 minute. And the reason why we execute our trades on a lower time frame is that we can maximize the momentum on either direction. So if it bounces off the fair value gap, we can get in for a buy because we can, we're trying to decide whether it's going to continue to break these highs on the left side. As you can see, there are higher highs on the left side. Okay, there are higher highs on the left side. Bullish momentum on the left side, but the overall trend is bearish. Okay, so for me, in order for me to take a bearish trade, it's got to break that lower line on the bottom based on my daily candle. It's got to break this orange line for me to even consider taking a sell trade. Okay, I mean, you could try to capitalize on this going down to the fair value gap, but you just don't know, when the pullback's going to happen. So as you can see on the 5-minute, it's a candle being developed, which is a reversal candle. When we see this candle right here, buyers are pushing it up, sellers are trying to push it down. Okay, but then you have a lot of great things happening here. This candle, we'll monitor it. Okay, see the pullback, and that's another thing. It may not even go all the way into your fair value gap in order for it to pull back up. So we can literally get into a trade right here, or we can wait for the pullback to continue. But you always want to place your trades inside of a fair value gap, unless something like this happens. But I'm not going to take the trade because this could be a fake out. As you can see, it's creating on the black candle. So you really want to place your trades closer towards a fair value gap, so that way you don't get faked out. Okay, because even though there's a fair value gap down there, there's a fair value gap up here as well. So keep that in mind. Like, this is a fair value gap right here that the market might want to go to, bounce off, and continue going lower. Okay. So you got to pay close attention to that. But there's also an order block as well. This is an order block right here that the market might want to go to. You're like, well, how do you know this stuff? Well, over time, you'll know the same exact thing. Like, this is an order block. Okay. This is an order block. So the market might want to come to the order block, bounce off of it, and go lower. So we'll continue to monitor it. Okay. As you can see, there's a huge pullback right here. But we're in the 5-minute candle time frame. There's 2 minutes and 35 seconds left. Okay, so we need to wait for the close of this candle. And this is that bearish engulfing candle that I talked about. Whenever you get to the fair value gap, you see something like this, then you might want to consider placing a buy trade. Okay, but it didn't hit the fair value gap, so we're not going to place a trade. We're going to wait. We're going to be patient. We're not going to do anything because, like I said, the market has to come back and fill these zones, and that's where you want to place your trades. So keep that in mind. You want to place your trades when the market's in a fair value gap, close to it, or when the market's close to an order block. Okay, now, so we'll continue to monitor that going forward. Okay, all right. So hopefully you guys are getting some value out of this video, and that's pretty much what I do when I mark up the charts. Split panels are a really good way to take a look to see what's going on, because on an hourly time frame, you got 21 minutes left in its candle. So everything you see here on the left is happening in that 1 hour. So how many 5-minute candles does it take an hour to get to an hour? Exactly. So you're just going to monitor these candles and see how this candle is going to close within 21 minutes. Okay. So as you can see, if I would have took a buy trade, it would have been short-lived, because now look, it's pulling back, right? It pretty much touched the order block, right? And it's not going higher than that, right? So that's why I didn't want to take that trade. It wouldn't have been a successful trade, because usually your ratio is either a 1-to-1 or a 1-to-2, and it didn't go as high enough to make some money on that. So you just wait for the fair value gap. There's 2 of them down here, and you just wait. So now over here on the hourly, we could take our Fibonacci tool, Fibonacci retracement. We point it to the bottom of this red candle here, stretch it all the way up to the top, and then the sweet spot is right where our fair value gap, 61.8 is a sweet spot, close to where our fair value gap is. So usually the market comes down to the 61.8 and bounces off, or the market can bounce off the 50% and continue its journey higher, which is pretty much what it just did. It got to the 50% area, which is the discounted area, and started trending higher, right? But the sweet spot for me is 61.8, which is a discount area, because you always want to buy something when it's on sale, discounted. You never want to buy when it's in a premium. You want to wait for the discounts to happen. So the discounts is 61.8, or coming down to 78.6, and I just caught another fair value gap, which I should have marked up, which is right here. It's that fair value gap. I marked it up over here. I just didn't mark it up over here. But again, the fib tool is right where those sweet spots are, which is really nice. 61.8, 78.6. Look at that. That's where the fair value gap is. All right. And you just wait for the market to come to these areas, these zones. Okay. These zones are the sweet spot zones. Look at that. Mark it up at such. Look at that. Perfect. That's 61.8 and that's 78.6. And that's where you want to consider placing a buy trade. But again, if the market breaks through all of this, then the overall bias we have for the market, which is a downtrend, right? You would place a trade based on the flow of the market. You go with the flow, because right now it's just retracing. Okay, pulling back, pulling back, and then once it, for me, once it breaks this orange line on the bottom here, then I'm thinking it's definitely coming back, going back down. Okay. And you could set alerts. Okay, my previous video I told you guys to set alerts to remind you that if the market comes down, crosses this area, let's say right there before it hits the line, I'm going to set an alert, copy its coordinates, go to this area over here, add an alert to alert me that if it crosses below that line based on value, to alert me. It'll send me an alert via email and also pop up an alert on the screen as well. And I'm going to take that same line and put it before the top orange line to alert me as well to get into a buy if it gets above this area. Okay. Put my alert that if it crosses up based on that valued number there, create. All right, and then I'll jump back on the chart when it does alert me to see whether or not I should take a sell trade or whether or not I should take a buy trade. Okay, but to educate you based on this video that I'm doing now, because we're in the middle. Okay, we're in the middle based on the daily. We're in the middle. Okay. All right, so look at that. It bounced off the middle. So yeah, so it bounced off the middle line. Okay, which is interesting. Okay. And again, we're on the hourly and we're also on the 5-minute. Okay, so basically you just gotta wait. It's the low of this area here. Okay. You just gotta wait for it to get to the fair value gap. And then, you execute your trades based on what you see. Because right here I'm bullish, right? I'm looking for buy trades. But when it crosses below this area, I'm looking for sell trades. Okay. All right. So I'll keep you posted on that. If it does get into that area and I do get into a trade, I'll record it, and then you guys could monitor it based on what I just shared with you in this video. But I also want to do a quick recap on my journey with these challenges, just to show you how I'm panning out, and then we'll come back to the chart real quick. So let me pull up a couple of screenshots for you. Okay, so this one, whoops, that's interesting. All right, so $25,000 challenge, one step, which means I got to pass it. So I'm in a challenge phase right now. I have to grow the account to $2,250, which is my profit target. I'm at $9.76, which is, I just started the challenge. Now my daily drawdown is $750. I can't go below that number in one day. If I do, I breach the account. I lose the account. I gotta start over. Maximum drawdown is pretty much $1,441.36. If I lose that amount in any given time period per day, the account is breached. I lose the account. I gotta start all over. So profitable day so far, one day since I just started, which is at $9.76 in profit. Okay, and this is pretty much the challenge. If I were to pass the challenge, I'm going to get an 80-20 split where I keep 80% of whatever I make, and the prop firm, which is for traders, actually keeps 20% of whatever I make in this. Once I pass the challenge and get a real life funded account, it's an 80-20 split. Okay, so that's 1A. Okay. All right. Okay, so the second one is this one. Another $25,000 fast start challenge. So I got two of them. Same thing apply, 80-20 split. Okay, again, I'm gonna make $2,250. In order to pass the challenge, I'm at $1,000. I made as much as $1,007.10. Okay, and yeah, I'm heading in the right direction. 2 profitable days so far, and I'm nowhere near the daily drawdown, so that's good. I want to stay away from that number. And let me see if I can show you the calendar. That's not it. Hold on, I'm trying to pull up the calendar. Okay, so this is the calendar. As you can see, I started on the 25th of March. Okay, and wasn't a great day. Negative $407. Second day though, positive $188.92. Third day, positive $1,224.52. So heading in the right direction, which is really, really good. All right, so that's the first account. Sorry, that's the second account. And the last account, which is a $15,000 Instant Pro account, which is no challenge phases at all that I need to pass. Purchase a straight funded account, and now whatever I make in this account is a 60-40 split, unlike the others where the split is higher. This is 60-40, meaning I keep 60% of whatever I make in this account, and the company keeps 40%. I'm in profit of $609 so far. Daily drawdown on this account is $900. So I did have a couple losses, and it says my daily drawdown is $883. $83.54. So as far as profitable days and activity, no such thing as whatever I make is what I make, and then you have to wait. You get a payout every 2 weeks, I believe. And yeah, so I'm going to grow this account. My goal for this account is $15,000. If I can grow the account to $15,000, I earn 60% of that, which is a nice payday for me. And I'll keep you guys posted. As long as I don't, go below the maximum drawdown, I'll be fine. So basically, this is where money management part of the business is important. You got to manage your downside. If you lose anywhere from $50 to $100, you got to stop trading, recalibrate, and trade again tomorrow. So this is the last and final account. Let me see if I have the calendar for you. All right, so this is the calendar for that account. Started Monday, March the 23rd. Was a positive green day, negative red day, and then positive green day, positive green day, positive green day. So yesterday I made $53.27. So it's all going. My best day was $718 in this account. Why I'm at $609. But yeah, you gotta pretty much try to minimize the drawdowns, because again, if I were at this day, if I went below that $900 threshold, then I would lose the account. So of course, I'm always learning, and I'm managing everything based on what I see in the chart. Okay, so that concludes my review of my challenges. If you guys want to challenge for yourself, this is the link that you want to go to. You can pause the video or click it. It'd be live link on the bottom in the description area. Click on the link and go ahead and purchase yourself a challenge. See if you can pass the challenge. They're very affordable. But again, don't buy a challenge unless you're consistently profitable in the market. Do not use your real funds, things of that nature. Create a paper account, a demo account first before you buy a challenge. All right. But if you're, a skilled trader right now, and you're in the middle, and you want to try getting a funded account where you're actually using other people's capital, trying to grow their capital, and they split that capital with you, then challenges is a great way to actually earn some additional income going forward. Because once you're profitable, you get your profit split. You can then use that money to buy more challenges, and you scale up from there. And then you also use those profits to start paying down your debt, start changing your zip code, things of that nature. Savings, emergency funds. You want to have all that stuff in place going forward. If you treat this as a hobby, you get hobby income, but if you treat it as a career, you get career income. So I'm going to end the video with this particular segment and say, hey, this is the link. This is my referral link to for traders from challenges. So if you do buy a challenge, disclaimer, I do make a small commission off of that, or referral bonus, I should say, off of you purchasing a challenge. So thanks everybody for watching the video. I got to jump on a webinar right now with a CashX. And again, if you guys aren't part of a CashX, you're missing out on these webinars and trainings that the traders put forth every so often on a Saturday. They do a training for all the traders, students inside the academy. The link for the academy will be in the description as well. Start your journey now. Become a student of the industry. Practice. Invest in yourself. Invest in this knowledge. Learn this skill set, because once you learn this skill set, no one could take it away from you, and you can write your own paycheck. Think about that for a moment. Where you're actually going into the market and extracting the money that you want to live off of. All right, the money that you want to become financially free with, the money to help you put food on the table, pay the bills, pay school fees for the kids, the money that you want to earn in this industry can change your life. So with that being said, thanks for watching the video. You guys have a great one. I'll keep you posted on Bitcoin to see if I actually place a trade, and I'll play. If it happens today, I'll record it and then put it up on the channel. But until then, you guys have a great great weekend and a successful trading week next week. I'll see y'all next week. Bye.